Welcome to today's market report. European stock markets edged lower on Monday, starting the week on a downbeat note, given COVID-related concerns and not reassured by healthy-looking Chinese economic growth. DAX in Germany traded 0.2% lower, the CAC 40 fell 0.3%, FTSE dropped 0.1%. China reported Monday that its economy grew 2.3% last year, as its gross domestic product rose by 6.5% in the fourth quarter from a year ago, helped by retail sales rising 4.6% in the final quarter from a year ago. The figures from the world's second largest economy have tended to be overshadowed by worries about the impact of the latest surge in COVID-19 cases, especially in Europe, but also further afield. China has recently locked down over 28 million people to combat the virus. In Europe, opposition to the latest restrictions is growing, as several thousand people held an unauthorized protest in Amsterdam on Sunday before being dispersed by riot police. While in the US, the spread of coronavirus has hit consumer spending, given Friday's weak retail sales. Still, losses are limited in Europe on Monday, with the US on holiday and ahead of the latest European Central Bank meeting on Thursday. Investors will also be keeping a wary eye on events in Washington amid concerns about possible violence at President-elect Joe Biden's inauguration on Wednesday, as well as how much of his proposed $1.9 trillion stimulus plan will get through Congress, given Republican opposition. Back in Europe, Carrefour stock slumped 6.5% after the Canadian company Couche-Tard abandoned its attempted takeover of the French retail giant after opposition from the French government. Suez stock climbed 2.6% after the French water company received an alternative offer from private equity firms Ardian and global infrastructure partners, giving it an option aside from the takeover attempt by rival Veolia Environnement. AstraZeneca stock rose 0.3% as the drug maker received US approval for its gastric cancer drug, while BT Group stock fell 2.9% as it faces a class action lawsuit over claims it failed to compensate elderly consumers who were overcharged for landlines for years. Oil prices fell on Monday as rising COVID-19 cases, particularly in China, calling into question the recent recovery in demand. US crude futures traded 0.8% lower at $51.99 per barrel. Brent fell 0.9% to $54.59 per barrel. Both benchmarks declined by more than 2% on Friday. Gold futures rose 0.2% to $1,833.60 per ounce. On the FX front, GBP/USD was below 136, while bears pushed sterling to oversold conditions. Britain's rapid vaccine campaign and optimism about the Biden era may prompt a bounce. Apart from the $1.9 trillion stimulus program, a plethora of executive orders that would also promote growth. Jerome Powell, chairman of the Federal Reserve, put an end to speculation about an early tapering of bond buyers, and the Fed may even go further with expanding its program that would also weigh on the greenback. The vaccination campaign is getting another shot in the arm in the UK, with those over 70 being asked to get their jabs. Over 6% of Brits have received at least one dose, and the highest in Western world. Another reason for optimism is the gradual descent in COVID-19 cases, which is showing that the lockdown is beating the effect of the new contagious variants. GBP/USD has dropped below the 50 and 100-day simple moving average on the 4-hour chart and also suffers from downside momentum. However, it is still holding above the 200 SMA, which is just around 135. And the relative strength index is touching 30. Oversold conditions indicate a bouncing is coming. Eurodollar reached 123 right after the Democrat win in Georgia, but has grinded lower recently as markets have begun questioning the Fed's plan to keep rates low for as long as it currently signals. The selling pressure keeps hurting the single currency and drags Eurodollar further south of the 121 mark at the beginning of the week. The dollar index steadied after touching a 1-month high and last traded at 90.857 as an undercurrent of risk aversion swept through currency markets in the backdrop of weak US economic data, knocking the Australian dollar and the euro lower. Aussie dollar is hitting a 1-week throw of 0.7679. This is today's market news. Thanks for listening. We'll see you next time.